Okay, we're going to be talking about Onyx Coin in this video. That's XCN, and this is the biggest performer within the whole of the Bullseye portfolio. This is the side portfolio that I've done in front of each and every single one of you guys using $50 and $50 with the one rule that I can only scale my position down and I can't scale my position up. So that one rule has got me on Onyx Coin $1,595 profit out of $99 that I put in there. So this is what the chart looks like for Onyx Coin. Is it too late to get into Onyx Coin? Where would I be buying if I was trading Onyx Coin? How can you tell when the bulls have really got momentum? Okay, so first thing is first. Onyx Coin is currently trading at 0.0222. It rejected at just under the 5 cent level. Remember, 5 cents, psychological round number. We talk about that all the time on the channel. We're going to talk about 5 cents very shortly once we zoom out. But first things first, how can you understand where you can get a well-diversified portfolio? You can subscribe to the Crypto Bullseye channel. We talk about portfolio management. We talk about risk management. We talk about diversification. Then this is the Bullseye portfolio. If you look on the playlist, each and every single one of the picks within the portfolio, $50 is within this playlist. This is what it looks like now. So it did look a lot better, guys. I've rode the wave down with you. Crypto markets pulled back as a whole, and this portfolio has took a hit as a whole. However, it's still $1,720.19 in profit. Why is that? Because we built during a build phase. We built at strong support. Now that the market's pushed up and pulled all the way back down, it's still sustained a profit. So that is diversification, my friends. Right, Onyx Coin, like I say, 0.0222. What we're going to do is we're going to stick a Fibonacci on there. That's what we're all about. Stick a fib from its bottom to its high, and we can see, is it sticking at any key levels? Look at this guy, golden 618. We talk about this all the time. Look where this candle held. On the day, 618. 618 is sat at $2, guys. We talk about psychological round numbers. So you've got the $2, that's your strong support. You've got the 2 cents, that's your strong support. 5 cents, that's your strong resistance. So this is the level that we need to hold in the short term, is the 2 cent level. Now, how do we understand when the bulls have got momentum? Of course, we stick on our diagonal. We wait for trend to be broken. Once trend is broken, that means you can protect yourself below the low, subject to a decent risk to reward. So you might get a break, something like this, shooting for the high. You might get a break, something like this, or you might get a break, which is more volatile, which is something like this, which comes up and tests at 38.2. What would happen then? Not a good enough risk to reward. What do you wait for? You wait for the pullback. Why do you wait for the pullback? Better risk to reward entry, less at risk, more reward. So this is how you can play it in the short term, guys. Why is 5 cents such a key psychological level? If we zoom out onto the weekly, what we're going to do is we're going to stick a Fibonacci from this swing high here. This is the main build-up of price action. I'm not interested in this. From this swing high here, all the way, it's on there, all the way to the swing low. Bear market low, right? Okay. So first things first, 38.2%. You can see between 4 cents and 5 cents, that's 38.2%, and the 5 cent psychological round number. Clues look left. You can see there was a big build-up of price action here. So this is going to be our range that we need to overcome in the short term. This is the range we need to overcome in the short term, between 4 and 5 cents. Once we start regaining the levels back up to 4 and 5 cents, we can try and take out this previous high and then go for the next one, which is the 618, sat at 0.662164. So it's a case of waiting for momentum as far as I'm concerned, guys. The time for building was down here. The time for trading is up here. But if you're trading, you need to be looking where you're exiting your position, where you're entering your position, and more importantly than any of those two, how much capital that you're protecting, or how much capital that you've got at risk that you need to protect. So it is all about risk to reward when you're trading, guys. The time for accumulation on XCN is over. Time for trading is nearly there. But we need one thing to happen. We need the break. We need to protect ourselves. And then we know if we're wrong with the least amount of capital at risk. And then guess what happens, guys? If price pulls back, you can take advantage of those lower levels with your stop loss position that you've stopped yourself out 2, 3, 4%, whatever you're risking. Then you can average that position down 10, 15%, however far price drops. So that's the method in my madness, guys. Let me know in the comments what you want me to cover next, and I'll see you in the next one.